We are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Since the beginning of the pandemic, we've taken forceful actions to provide relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. Today, my colleagues on the FOMC and I reaffirmed our strong forward guidance for interest rates and also provided additional guidance for our asset purchases. Together, these measures will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. Economic activity has continued to recover from its depressed second quarter level. The substantial reopening of the economy led to a rapid rebound in activity, and real GDP rose at an annual rate of 33% in the third quarter. In recent months, however, the pace of improvement has moderated. Household spending on goods, especially durable goods, has been strong and has moved above its pre-pandemic level. In contrast, spending on services remains low, especially in sectors that typically require people to gather closely, including travel and hospitality. The overall rebound in household spending owes in part to federal stimulus payments and expanded unemployment benefits, which provided essential support to many families and individuals. The housing sector has fully recovered from the downturn, supported in part by low mortgage interest rates. Business investment has also picked up. The recovery has progressed more quickly than generally expected, and forecasts from FOMC participants for economic growth this year have been revised up since our September summary of economic projections. Even so, overall economic activity remains well below its level before the pandemic, and the path ahead remains highly uncertain. In the labor market, more than half of the 22 million jobs that were lost in March and April have been regained, as many people were able to return to work. As with overall economic activity, the pace of improvement in the labor market has moderated. Job growth slowed to 245,000 in November, and while the unemployment rate has continued to decline, it remains elevated at 6.7%. Participation in the labor market remains notably below pre-pandemic levels. Although there has been much progress in the labor market since the spring, we will not lose sight of the millions of Americans who remain out of work. Looking ahead, FOMC participants project the unemployment rate to continue to decline. The median projection is 5% at the end of next year and moves below 4% by 2023. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, the high level of joblessness has been especially severe for lower-wage workers in the service sector and for African Americans and Hispanics. The economic dislocation has upended many lives and created great uncertainty about the future. The pandemic has also left a significant imprint on inflation. Following large declines in the spring, consumer prices picked up over the summer, but have leveled out more recently. For those sectors that have been most adversely affected by the pandemic, prices remain particularly soft. Overall, on a 12-month basis, inflation remains below our 2% longer-run objective. The median inflation projection from FOMC participants rises from 1.2% this year to 1.8% next year, and reaches 2% in 2023. As we have emphasized throughout the pandemic, the outlook for the economy is extraordinarily uncertain and will depend in large part on the course of the virus.
So we're listening to Jerome Powell, the Federal Reserve Chair. Jerome, and he said inflation is going to be at 2%. Next year is going to be at 3%. So more printing of the money to help stabilize the United States, people who offer jobs. It's not looking good, but the vaccine is on the way. They said they're going to keep the rates at 0.25, which means they're going to let the banks get money from the Federal Reserve at 0.25, but the people will pay 3% to 4%. Let's look at Bitcoin. After Jerome Powell came out with this statement, the Bitcoin market boomed up. Why is that? Because we're going to see more inflation of fiat dollars. Bitcoin hasn't been over 20K ever. And now we're seeing it just explode through $20,000. Let's look at the chart in the monthly. Last month, Bitcoin blew up. Vaccine came out, Bitcoin went down, and then the Fed talk, Bitcoin pushes up. What is the limit you guys are thinking Bitcoin is going to go to? I have no idea, but I'm thinking 50K is the new number. $50,000 per Bitcoin. And the crazy thing, I was buying Bitcoin down here. Yes, around down here, Mr. Adams was buying Bitcoin. Until the US government and central banks around the world stop printing so much money, the price of this asset is going to keep going higher.
There's a couple things that are really driving it besides the macro tailwinds, which we just all talked about, but you have a lot of institutional adoption. So you've had over the last week or so, you've had Mass Mutual say that they're going to be buying into Bitcoin. You've had corporate treasuries with MicroStrategy and Square buying into Bitcoin. So you kind of have these large, strong-handed buyers coming in. And let's remember, there's only 21 million Bitcoin that will ever exist. There's 18.5 million Bitcoin currently in circulation. The extra 3.5 million Bitcoin are going to be created over the next 100 years. So the supply is severely constrained in an environment, just like we talked about with the Fed. They're just going to continue to print money. It doesn't matter what the economy does. They're just going to continue to print money. And so investors are saying, well, I can buy gold, which is the traditional one, or I can buy Bitcoin, which is digital gold with a venture capital tech kicker.
Yeah, and some CEOs are saying, I'm going to buy Bitcoin instead of having cash on the balance sheet, which is the case in MicroStrategy and their cash reserves when we spoke with Michael Saylor. You might be asking, what about the technicals on this breakout? Well, Carter Braxton-Worth at Cornerstone Macro actually sent this chart along, and this is what he wrote. He wrote, this move is, quote unquote, a proper breakout, an old-fashioned textbook breakout.
Scott, Guggenheim has reserved the right to invest up to 10% of its macro fund in Bitcoin. Have you guys started buying yet?
Of course, we made the decision to start allocating toward Bitcoin when Bitcoin was at 10,000. Amazing, over a very short period of time, how big of a run-up we've had. But having said that, our fundamental work shows that Bitcoin should be worth about $400,000.
Whoa.
So, we're going to, even if we had the ability to do so today, we're going to monitor the market and see how trading goes.
So institutional investors are saying $400,000 Bitcoin. Can you see how far that is away? That is to here. Institutional investors are saying $400,000 Bitcoin. We have a major breakout. There's billions of people in the world, but there's only 21 million Bitcoin. And the thing is, people don't understand you can buy things with Bitcoin. There are credit cards out there where it will automatically change your Bitcoin to cash. There's ATMs out there. Ferrari takes Bitcoin. You can use property to sell your real estate and get Bitcoin, or buy real estate with cryptocurrencies. Now, the one thing people don't know, that Bitcoin can be a lot faster with using the Lightning Network. If you have a Bitcoin Lightning node, check out my website, BritVR Crypto, and let's make a connection. And while we make the connection, we charge people small amounts of Satoshis to send out their Bitcoin to whoever they want. And their Bitcoin gets to any address within seconds, not minutes, not 15 minutes, due to the out-of-date network of Bitcoin. So I hope you enjoyed this video. Hit the like button, hit the subscriber button. Thank you guys for watching, and all you guys have a good day, and all you guys have a good night. Enjoy the crypto life. Peace.